at some point, I think it would be easier for producers to turn to different chemistry rather than continue pursuing higher energy density.
Welcome viewers to this review of trends in the EV and lithium-ion battery market. I'm pleased to be joined by Egor Prokhodtsev, who is Senior Analyst for EV raw materials at Roskill. And Roskill is, of course, one of the leading global strategy and data provider firms covering metals, chemicals, and various industrial industries. Egor, let me pass over to you for the presentation. Thanks.
Thank you very much. I'm very happy to present you with the recent trends of the automotive market and cover the lithium-ion demand and the recent trends that are happening in the market so far. So my presentation will be divided into two major parts. I will focus a bit on the recent developments on the EV and lithium-ion market, and after that, we will focus more on the outlook side, and particularly with focus on the European region developments. So as we all know, 2020 was a shocking year for all the industries around the world, and vehicle production was hit dramatically by the pandemic. And as we see in the first half of 2020, industry lost all around 12 million units produced, but recovered in the second half of the 2020, moving forward to 2021, showing pretty similar dynamics compared to pre-crisis 2019, which gives us hope that things could be brought back to normal very soon. Main issue for the vehicle production currently being the shortage of semiconductors that needed to be overcome in order to bring sales and production to similar levels of the pre-crisis year of 2019. And if this could be sorted out, if it could be solved pretty quickly, then we could probably see 2021 vehicle sales increasing to the pre-crisis level. On the front of electric vehicle sales, we saw a record high sales closer to the end of 2020, and surprisingly high first quarter of 2021 being very close to the peak of December sales, which is historically the highest selling month for electric vehicles. With this, we can see that sales, particularly in China, are skyrocketing, and that is quite different to the end of 2020, when Europe actually being the leading region for 2020. But starting from 2021, we can see that China is back to the first most selling electric vehicles region, followed by North America, which we all hope would bring up to speed with the new stimulus package and CO2 emission goals presented by President Biden recently. On the front of production, we can see that Tesla remaining the most selling brand for the first 4 months of 2021 on a global level. However, looking at the more segmented way on the regional basis, we could see that actually customers tend to choose vehicles from their own countries of origin, leading particularly traditional European car manufacturers being the most selling brands in Europe, with the same situation in China and North America. And as we can see, the Tesla dominance is mostly supported by sales in North America, while other main electric vehicle regions are quite tense in terms of competition, and this situation might change quite rapidly in the following years when more and more models will be presented by the legacy automotive producers. On the front of chemistry and cathode installments in electric vehicles, we can see and prove the trend that was on the market for some time now, that producers tend to move towards more nickel intense chemistries, and particularly with the increased sales of low-cost electric vehicles in China, the demand for LFP is increasing rapidly as well. So with this, we can see that there's actually three parts of the demand that are forming the landscape of cathode chemistries, which is the average battery size, units sold, and the chemistry itself. With the presented most selling brand of Wuling in China, which is a very short-range vehicle equipped with LFP battery, we can see that compared to 2020, average battery in the battery electric vehicles went down for 13%, while going up in terms of units still proved higher demand for LFP. And with this in mind, we can see that future cathode demand would be focused, centered around three main types of chemistry. So say we would expect that LFP batteries would remain dominant in the field of entry-level vehicles and the lower priced models, proving the cost efficiency of those and increased demand for the from the customers, while other two being the NCM and CA, as we know, and with movements to more nickel intense cathodes. And recently announced by particular Tesla and Volkswagen cathodes mixed of only nickel and manganese, which would be introduced to the market closer to the middle of this decade and gaining traction closer to 2030. And talking more about the absolute amount of sales, we would expect electric vehicle sales of all types to reach 35 million units by 2030, with most demand coming from battery electric vehicles, which would require the huge amount of battery capacity that we'll cover a bit later. And Europe is forecasted to be among the dominant regions for the electric vehicle penetration, particularly with all the government plans announced for CO2 emission cuts and providing necessary steps for sustainable development. In order to reach that level of production, gigafactories in Europe are expected to pass 1 terawatt-hour capacity by 2030, with the most capacity being installed in Germany, particularly with the development of automotive production there. So with that, I would like to conclude and answer your questions.
Just relating back to what you were saying around evolutions with the cathode materials, do you see nickel as the biggest supply side risk, given the increased application of nickel within the cathode, or as a preference from some of the manufacturers, as you mentioned?
Well, there's always two sides of this question, I would say.
Right.
Because nickel being most assuredly most demanded metal for battery industry, but at some point I think it will all come to price, because well, particularly metal prices couldn't grow indefinitely, and at some point I think it would be easier for producers to turn to different chemistry rather than continue pursuing higher energy density, because even though it is very important to ensure long ranges and better performance, I think that at certain point, particularly reaching more like mass segment vehicles, it would come to price in the end. So with the technologies announced, particularly by BYD and CATL, of blade batteries and cell to pack technologies that would that promise to increase the energy density of LFP, particularly will bring them at a high competitive advantage compared to some of NCMs as well on the pack level. So there will definitely be higher demand for nickel, but if the supply situation wouldn't be able to handle it, basically, then I think that at some point producers would turn to different non-nickel chemistries, particularly being announced by Tesla and Volkswagen of the higher manganese and LFP chemistries among the one that are on the radar now.
Yeah. So it strikes me that it's a lot of work for the OEMs to basically be reactive to the material supply, rather than just sort of picking their battery chemistry based on the performance relative to that region or that type of vehicle that they're trying to sell. They've got to be very reactive to what's available at scale in the market.
Yes, and it's actually quite a long development cycle, I would say, because usual how to say the period of R&D for vehicle OEMs would be around 18 months, I think. Mm-hmm. So just in order to introduce new chemistry, it would take significant amount of working hours of engineers and other staff to incorporate new chemistry, which is, of course, a big challenge for the whole industry, basically, because it's a very I would say low speed of reaction between commercialization and actual installment in the end product, for particularly being for electric vehicles.
Yeah, absolutely. It certainly is. Okay. I have another question around relating the sort of cost per kilowatt hour to the overall cost of the vehicle, the end product, if you like. Because if these OEMs are going to really scale electric vehicles beyond just a luxury product to a mass market, which seems to be that they're edging towards it, but it's still a reduced number of cars when you consider how many ICE vehicles are sold or on the roads per year. How far does the cost have to come down of the battery packs in order to create, ultimately a cheaper model vehicle that will be able to that will appeal to a mass market in Europe?
It's an interesting question. Well, I think that the threshold that has been announced of $100 per kilowatt hour,
right,
is quite near, hopefully, but it's always a question of the material costs actually being the most independent part of this cost analysis. Mm-hmm. If we look at the past years of the associated cost trend decrease, it was mainly driven by pack optimization and everything that is actually not related to raw material demand. So at some point, I think that it will come to sort of natural barrier of the market prices for metals, which could be, I think they're very close in time, taking into account recent price rallies for the battery metals in particular. But and there is also another side of this question related to the total cost of ownership, because it might be the most selling parts for electric vehicle owners, but the problem is that you always see at the label price rather than take into account the whole spendings over the period of ownership. Taking into account that usually electricity comes at a lower cost, and maintenance is comparably lower to internal combustion vehicles. I think that there is also thing to be considered in the mind of consumers that need to start counting in the longer period of ownership rather than looking at the label price from the dealers.
Yeah, so potentially a mindset change in the consumer of total cost of ownership, as you mentioned. Yeah.
And it definitely takes time and a lot of marketing efforts, particularly for automotive producers, I think.
Excellent. Okay, well, Igor, thanks very much for that rapid but succinct view of where the market is at the moment. It seems that a lot is changing at quite a pace, and it's really good to have an update to be able to share with our investors and companies at 1-to-1 Money Investment EMEA. So thank you very much for that today.
Thank you very much.